Morning, guys. I'm conflicted. I'm not sure I made the right decision to invest in oil tankers compared to airlines or restaurants um, or cruise lines or hotel chains, who all have gone up a lot. If I would have invested in that, I would have made 40% or so the past 2-3 weeks, and with oil tankers, I have made nothing. Um, so I have that emotional reaction of saying fuck, um, and looking back at, did I make the right decision? And I made a video where I said that um, like 2 months ago or so, or a month ago, where I said invest in where people need you, huh? Like there's a big crisis. Um, you, if you support the businesses in need, you will be rewarded. And I failed to do that. Oil tankers didn't need my money. They're making good cash. They have no bankruptcy threat. Whereas, well, many of these companies that pumped a lot actually did need my money, but I didn't give it. It was other people that gave it and are still giving it. So I think that's one side of the story. Risk was rewarded, and it is often is for good reason. But there's more to it. As an investor, do you want to take high risk, high reward investments? Is that the right approach? Logically, it is not, because the chances that you will make money is lower than if you find a low risk, high reward investment. Are you being a coward then? No, I don't think so. You're just rewarding the one that deserves it the most, the first. Because what are you doing when you buy stocks or buy a currency? You raise the value of it by raising the demand. You don't raise the supply of stocks in circulation or coins in circulation, but you raise the demand by buying it. And that pushes up the price if supply stays the same. So you basically value, you value something higher, and that has a lot of benefits for the recipient. If a stock is valued higher, an entrepreneur has more possibilities to raise capital, for example, or is just rewarded for his work, because he also owns lots of shares or coins, and the value of his shares and coins goes up. That's the job of an investor. That's why they call it also passive investing, because it's it's only a small influence that you have on the project, but it's a crucial part of it. And who do you need to reward first, or which stocks or currencies do you need to push up the value first? The ones that have low risk, meaning they do certain things well, with hard evidence. In the case of stocks, they are making money, or in the case of currencies, there is adoption clearly. They are the most, they deserve it the most. So as a capitalist, as an investor, it's your job to give it to them first. Only when you don't see such opportunities or such situations where there is low risk, let's say the only thing you see is high risk, yes, of course, then you need to allocate your capital there. But that's rare. There is always misallocation of capital in the markets, because lots of capital is misallocated by small and big investors, and so you see overvaluation and undervaluation compared to your own opinion and compared to the risks and potentials that you see. So I do believe that I did my job right, but I'm suffering from, when I have this feeling, it's a little bit like being jealous of someone else. The feeling of FOMO, fear of missing out, like something goes up that you considered buying, or even if you didn't consider it buying, and you feel like jealous, or you feel like you missed an opportunity. The missing of opportunity hurts. But often, just like with jealousy, it's not rooted in reality, because like if you're jealous of another person's success, it's often because you are blind to, you're not really seeing what this person had to go through to get there, and actually you were not willing to do that. If you stipulated out what this person had to do to get there, it's actually something you don't want to do. And the moment you realize that, you don't feel jealous anymore. It's the same with these feelings of missed opportunity. Like, yeah, these airlines went up a lot. I really considered investing in, for example, the cruise line Carnival or Ryanair, and they've been up the past 2 weeks, I don't know, 30% each or 40%. Yes, I was considering investing in it, but I didn't do it, and for good reasons. I was not willing to take that risk. Other people were, but not me. The people that sit on those profits now were willing to take that risk. I was not willing to take that risk, which I perceived as high risk. Or I was not willing to invest in a company because I found that the growth rates were too slow for both of these companies, which is also a risk. If you have high growth rate, risk is a lot lower to invest in something, because it's much more likely that the value of the stock will go up if you have high growth than if you have average growth or low growth. And it's not even realistic, because even if I would have decided to invest in them, I would have insisted on waiting for a correction before I would invest, and that never happened. So just thinking it more through, I do believe I made the right investment. I mean, compared to airlines, the things that I studied, I took the thing that fits best with my investment philosophy and my goals of life, which is to make money in the markets with the highest probability to become financially successful, and to see my capital being useful. And when you take high risk, yes, your capital can be very useful, but it can also be totally wasted. If you like save, for example, or if you allocate capital towards a company that's on the verge of bankruptcy, you raise the value of that company, and in that way you help it, but it may be all to no avail, and actually the value may still go to zero, despite your effort of trying to raise the value, and thereby you lose your money. What I didn't do well, and what I still can do well, is do better my homework on the investment that I made, because I'm not sure is my timing right. Actually, I didn't even do the historical analysis of when do oil stocks go up in valuation compared to shipping rates. I never did, and that could cost me 2 years of having to wait, or 3 years possibly having to wait for the stock price to go up, and in the meantime, well, I'll get dividends, but that's actually not the way I prefer to invest. I really am looking for capital appreciation, so I could add some more work there instead of feeling jealous of other investments. That would be much more useful. Or look for other great low risk, high reward investments, because there are many more than the one that I found, thanks to you guys, by the way. So if you have any other low risk, high reward investments, let me know. That would be interesting. Forgot to discuss, but look, another feeling I had yesterday was Tesla just breached $1,000, and actually I had a lot of options on Tesla that were at $1,000 and only expired in September, and I sold them all for about $80 a piece or so. I bought them at $15, so I was sitting on very nice gains, and I sold them a month or so ago because I found it too high risk to hold these options. But today it looks like the payoff will be tremendous if I would have held them a lot higher than likely than what I got for it, because by September Tesla will likely be 1,000 at this rate, of course, $1,500 or so. But it's the same here. I have this feeling like, damn, did I make a mistake? Did I sell out too soon? I do have the philosophy when you invest in a 10-bagger that you should hold the whole way up, and I not sell too soon. That's painful. But that is for when you buy stocks or currencies. In the case of options, actually I have no experience with options. The first time I bought call options, and the terms are very different there. It's a little bit like investing with margin, investing with loans that you took out. That's a different thing. Should you sit out a 10-bagger? That's actually very risky because you have a loan standing out. In the case of options calls, I mean, in a flash crash, the value of your option can go to zero, from very high to zero. That's not going to be the case with a stock or a currency that you hold. So I found the risk too high, and also the profits that I had made, the chance to lose them again, the risk was too high. Maybe it was 20-30% risk that I would lose it all again, and that was just too high. I was not willing to take that. If I have 20-30% to like lose 50% and then recover it back, okay, that's another story. But 20-30% to lose it all, because I've at the expiry date, let's say it goes to 2,500 and I hold it, and then a month later, on the expiry date, or weeks later, when the actual expiry date of the option is, it crashes to 900. Oh, that's possible. Well, I have zero. Then I have made much more profits in the meantime, but after that it goes to zero. Like, that's possible with options. So I found the risk too high. So I have this feeling, or part of me feels like, damn, I should have held, or at least not sold everything and held half. But I was very conscious actually when I made those decisions, and I didn't want to even keep half, because the same applies to the other half. It's the same risk. Yes, there is 30% chance to lose it all, and I don't want to take that risk. And we're in the middle of a crisis. There are plenty of other opportunities where I can allocate that capital with a much better risk-reward ratio. Also want to lower the stress levels of my portfolio and of myself, therefore. So I made those decisions being aware that I was sitting on a potential fortune, that I could go up a lot more. But because of the instrument that I chose, I was not willing to ride out a 10-bagger, so to speak. And no. So yeah. Hope it is of value to you. Thanks for watching.